buying a home is quite often the largest investment somebody makes in their lifetime and can be quite intimidating for a first-time homeowner. We interview Ulyn-Ann Francis of RBC's Mortgage Specialist Team. So welcome, Ulyn-Ann. Lovely to have you here.
Thank you for having me, JP.
And it's great for Terra to be able to collaborate with RBC and to hear a little bit about what you guys offer. So you're a mortgage specialist with RBC. Maybe
Yes,
you could
I
tell
am.
us a little bit about what a mortgage specialist is.
A mortgage specialist basically is someone who eats, breathes, and sleeps mortgages. So our core solitary focus is on the mortgage product. But not only do we assist clients financially, we also give them great advice and guide them through the entire process. And we help to connect them to people like you, JP. So when they're property
Great.
hunting, we help them with partnering with persons like yourselves.
Great. You know, financial advice is so important, especially for younger people in these times. And we're both in the property business, right? So, and we love Terra when we can put a buyer into a property. But quite often we get caught in the mix where, you know, they find the property they love and they're not able to commit. So that's where we would like to drive them to you. You can, you know, give some advice on so what are the first few things really that you would want to see in a mortgage situation?
Honestly, my first advice to persons who are thinking about entering into a mortgage is get qualified, pre-qualified. Speak to your banker. Let them know this is what I'm looking at doing, whether it's immediately, whether it's in the medium term or long term. And let them look at your financial situation to determine what you can afford. So
Right.
that to me is the fundamental thing that a potential homeowner should do, get pre-qualified.
So they can get pre-qualified pretty easily, right? I mean,
Yeah.
So maybe you can explain to me what information you need to pre-qualify somebody, and then what's the difference between being pre-qualified and being pre-approved?
That's an excellent question. So pre-qualification is pretty simple. It has no costs, no obligations attached. So what we would ask the client for is simple pieces of information. What is your monthly gross income? What are your
Sure.
liabilities, if you have any? So we're speaking to loans, credit cards, overdraft facilities, and to determine how long we constructed the facility over, how old you are, what's the age of retirement, not exceeding 30 years or 15 years if we're doing lot loans. So we would use that information, and then we would pre-qualify the client based on their overall debt position. But you asked the difference between pre-qualification and pre-approvals.
Yes, please.
So that term, I realize, is used very interchangeably, but there is a big difference. So as I said, pre-qualification, high level, just based
Right.
on your debt obligations. Pre-approvals, now we get a little step further. So we take additional information into account, such as your employment stability. But that would speak to if you're able to pay this facility over the long term. We look at your credit rating. How have you paid your previous debts? So
Yeah.
that's very important. We also look at the suitability of the property you're looking to purchase, because this isn't going to be the bank's collateral.
Of
So you want
course.
to make sure the property is in good standing. So
Of
those are the
course.
additional factors we would take into account. We document it on paper, or what we call the application process, and then we position it to our adjudication team, and then we get the official pre-approval letter that we can present to the customer. So they now know I'm not just qualified, but I am pre-approved for this particular facility.
Right. So then when I take them out and show them their dream home, they're in a position to commit.
Exactly.
Yeah, absolutely.
Exactly.
And you know, I believe strongly that young people with combined incomes and job security need to get into the real estate market, because that's how wealth is created, right?
Correct.
So get into the market as soon as you can, use the bank's money, buy your future home, and it will appreciate over time.
Yeah.
So what are some of the factors that positively impact somebody's borrowing power?
So as I said before, and I'll say it again, start early, because the longer the time that you have to structure your mortgage over, you would automatically qualify for more.
And smaller payments.
Exactly, you benefit from lesser installments, etc. So that is one key factor. The other key factor is the income. So whether it's an individual income, you're doing this mortgage by yourself, or you're doing it jointly with your spouse, we want the bigger the income is the more you would qualify for. As well as, third most important factor as well, when you're coming to do a mortgage, ideally you would want to be as not heavily indebted as possible. So the more debts you have, the less you will qualify for. So these are things, again, that you would want to make sure that you have in line, what you have control over, that is, so that you would qualify for the maximum that you could afford, basically.
Right, so somebody coming to you, you can advise them whether to close off that credit card.
Exactly.
Maybe they don't need 3 credit cards, maybe they just need 1. And
Correct.
of course, the bank would assess them accordingly.
Correct.
Right. So maybe another interesting question I had in mind was if somebody qualifies to borrow, let's say, 1 million.
Yeah.
And then they find their dream home, and let's say it's less. Let's say it's 900,000. How much money can they borrow from the bank?
Well, on paper, they qualify for the million, but in this instance, because the property we're looking at purchasing is 900, the figure the bank will be using would be the $900,000. So
Right.
we would lend them, the bank finances up to 95% on homes, properly, well, completed homes, I should say. And for land loans, we go up to 90%. So even though on paper the customer could have qualified for $1 million and they found something for under that budget, they still have to put out a level of down payment based on what they can afford, whether it's 5% or 10%. And we will finance the difference.
Yeah, because the security on the loan is obviously the asset they're purchasing,
Exactly.
not necessarily what they qualify for.
Exactly.
So the loan is based on the asset they're purchasing. So is that the only cost, is the mortgage payments on the closing day? I mean, surely there are other costs. Maybe you could speak to those.
Definitely, definitely. So yes, you have your down payments to make, at least especially if you're coming to RBC, you need to have at least a 5% down payment. But there are other staple costs attached to a mortgage, such as your valuation report fee,
Correct.
the bank fee, your legal fees, including your stamp duty payable to Board of Inland Revenue. And depending on the situation, you may need also to have your insurance premiums. You need to have that monies put aside as well. So those are things that you would have to cater for. And that's why I impress, have the conversation early. Because some persons have to plan towards these things. They may not have a fairy godmother or godfather to give them this money.
Yes,
they may actually have to start a savings plan to accumulate these funds. So these are some of the basic monies that you would need to have once you're speaking to getting into a mortgage.
Yeah, that's great advice because it's so important for people to understand because they know they have to come up with 10% when they sign the agreement for sale, right? But they may not always know that all of these, so the stamp duty, the valuation, these are all the legal fees, these are all additional costs. Correct. So they need more than 10% to make it happen.
Exactly.
So they need to get that advice from early. Maybe borrow a little bit of money from that fairy godmother, and so that they're able to close.
Yes.
And you can pay back over time, right? But you know, you have to get in the game, get in the property game. And I heard somebody say it quite well the other day. It's not so much about timing the market to get in at the right time, but it's time in the market. So get in early, borrow money from the bank, and over time, properties appreciate. Especially in an inflationary period like this, where the dollar is weakening, real property doesn't weaken in times like this. So I think that's some great advice you've given us, Ulyn-Ann.
And one thing I want to add, JP, when we were speaking to the person qualifying for $1 million, and they found a property for 900, and I stated that the bank would look at what they're purchasing, because that's the asset. So we look at the 900,000.
Absolutely.
We have the situations where the property may be 900. But the valuation report came in at 800,000. What do we do then?
I'm happy you mentioned that.
Right. So the bank would look at the lesser value, which in this case is the valuation. And we would finance based on that price. So therefore, if that customer wants to continue that particular purchase, they have to make that extra injection. So we'll be financing whether it's 95% of the 800 or 90%. And then they still have to put that extra $100,000 that is over market price. So in those situations, that's how we rate.
So that's another scenario where they're going to need a little more money.
Exactly.
It's not as simple as the 10% to sign the agreement.
Exactly.
Right? There's lots of technicalities. And that's where, Terra Caribbean and RBC will hold the customer's hand and walk them through. Because, it's not a perfect world and there's always things that come up that we need to discuss and advise on. So so that's a good scenario too.
And a mortgage is it's a scary process for some persons.
Yes.
It's a lifelong commitment, and when somebody is entering into that, they want to ensure that they have a strong body of people around them, supporting them, providing them with that right advice. And this is why these types of collaborations really help. And as I mentioned before, our role is not just to give them the financing, but to hold their hands through the process, to partner with some of the key stakeholders like yourselves, the attorneys, the quantity surveyors, and help the client to feel that we have their best interest at heart.
Correct.
So it's really, really important, our job, our role and function. And I say our, meaning our role and
Together,
function in
absolutely.
the process to really help that person become a homeowner.
Yeah, it's, job security. I speak to that again because that's so important. Once you have job security, you're able to borrow, you should. And where the bank, I find, plays a very good role here is assessing the job security, right?
Yeah.
So you want to be sure that who you're working with can borrow their money, and that's good advice because we don't want anybody getting into a situation where they can't afford. But as long as you can afford and you have job security, now is the time, to get into the real estate business. So I would suggest to any of our viewers, reach out to Ulyn-Ann at RBC's team of mortgage specialists and start the process.
Have that conversation, yes, definitely. Thank you, JP, so much for having me.
You're welcome, Ulyn-Ann. Thank you for coming.
Thank you.